Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy.
All right, folks, today we're going to take a look at my favorite trading strategy. It's also my simplest trading strategy, and I wouldn't say it's my favorite because it's so simple, but it is a nice added bonus that it is very simple. So let's just talk about the setup, and you should be able to do this on most or all trading software that you use. If you have something that can't simply show you candlesticks on different time frames and EMAs, you might want to just look at something else. There's plenty of free ones out there. This is Webull, which is what I'm using, and I've just used it for several years and I enjoy it. So yeah, that's why I'm using it. But there's plenty of other options out there. Now, the way that I set it up is I set up the EMAs. So on Webull, for example, you just come into indicators, you select EMAs, and then it'll give you options on how you want to set it up. Like what time frames and whatnot that you want. So I have the length of the EMAs 8, 21, and 34. Ignore the 30, ignore the 200 because I don't have those active. I'll show you in a moment. And the 183. So I have 4 EMAs, 8, 21, 34, and 183. Now here's where I select which ones to turn on, turn off. I think the 200 and the 30 are just auto-populated by them, and so that's why they're there. They aren't there because I actually use them. So my 8, 21, and 34 are my short-term EMAs. So this is the exponential moving average of the stock price over short periods of time. So 8 trading days, 21 trading days, and 34 trading days. Now the reason I have 3 of those is because I want to be able to catch relatively in the near future moves as they're happening. If you are only focused on longer term EMAs, for me, I just have one, the 183. But if you're only focused on the longer term ones, it's going to be hard to catch sort of a significant move in the short term. So in other words, if I'm looking to trade a stock and I want to get into the stock and get out in like a matter of days, weeks, or even months, right? Typically, I'm looking to get in and out of something within about 2 to 8 weeks. That's the time frame that I want to be in. And so that's why I use these short-term EMAs. Now, if you're going even shorter term, like intraday or whatnot, you can still use the 8, 21, and 34 and just change your time frame. So instead of looking at the daily chart, you can look at like the 10-minute or the 5-minute, whatever suits you. But that's why I have those 3 short-term EMAs. I'm looking for specific action, which we'll talk about in a moment, of those short-term EMAs to give me sort of buy signals and sell signals. The 183 EMA is my long-term EMA. That tells me sort of 2 things. One, it gives me a really good target for potential strong resistance if the price is below the 183. If the price is above the 183, it gives me a really good opportunity for strong support. So this is just over long periods of time where I would look for incredibly strong support or resistance, whether, and it just depends whether the price is above or below. If it's above, it's support. If it's below, it's resistance. Also, it gives me a sense of what trend the stock is in. So I consider if the price action is above the 183, I consider that stock to currently be in a bullish trend. And if it's below, I consider it to be in a bearish trend. And again, that shifts with the time frame. So for example, right now we're looking at NVIDIA. We're going to look at 4 stocks here and just see how this looks on these 4 different stocks, NVIDIA, AMD, Tesla, and SoFi. You can see the price action above the 183 here. If I flip to like the 10 minutes, intraday, including yesterday, it's having a couple of bearish days, right? So I would say, okay, intraday, it's bearish at the moment, but longer term, like on the daily, it's bullish. And I typically tend to trade, I make my trading decisions off the daily, and I make my entry decisions on the 10-minute. So if I'm looking to go long in NVIDIA, I probably wouldn't get in right now because it's not showing me indications that it's going to reverse for the day yet. It certainly could, but it's not yet. So we'll talk about what those signals are in a moment. Now, essentially what I'm looking for here in terms of getting in are crossovers. So you see here where the white, that's the 8, the peach colored 21, and the red 34, these are stacked in a bearish formation, meaning the 8, the shortest term, is the lowest of those three, right? It goes 8, 21, 34. What I want it to be, if I'm looking for it to be bullish, is I want it to be the reverse. I want the 8 to be on top. So from the top down, 8, 21, 34. So if the 8's on top and then 21 and then 34, fully bullish formation. If it's the reverse, fully bearish formation. If it's somewhere in the middle, that's where we're in sort of like a change period or a potential for a change period. And so what I would have been looking for here, there was a couple of things happening during this period for NVIDIA. It had come down and it's catching resistance off of the 21 EMA, and then it's catching resistance off of the 8. So typically, if it's catching resistance off of the shorter term EMA, or support for that matter, it's showing that there's potential for like a stronger move in that direction. Meaning if it starts to reject off of the 8, right? We saw back here, it's not even being able to reach the 8. Here it rejects the 8. Here it rejects close to the 21. You know, that typically is saying, okay, there's more bearish momentum that probably has to be exhausted before a reversal can take place. And we saw that play out here, strong wick down and a nice hammer candle, to be honest, right here. And then it started to move through those EMAs. And here's where it would have gotten interesting. You see the first crossover happens when the white 8 EMA crosses above the peach 21 EMA. And the price action is holding steady well above the 8. Right? So in order to look for bullish potential, it's not a guarantee, it's potential. You want that stock price to be above that short-term EMA and holding strong while these crossovers are happening. So we get the crossover of the 8 of the 21, and then we swiftly get the crossover of the 8 of the 34. So now we're almost fully in a bullish formation, right? You see this period right here, you have white, red, peach. What you want is white, peach, red. So we get one more crossover here, right? And this is where that would have taken place. And then, we would have been in a very strong motion because we're above the 183, this gray EMA down here already. So we're already in sort of a longer term overall bullish positioning or market for NVIDIA. And now we get the short term EMAs also crossing over into bullish formation. So for me, if I was being a little bit more aggressive, I probably would have taken the position here when the 8 crossed the 21, but hadn't yet crossed the 34. Also, it was so close to crossing the 34 that, there's, more of a likelihood that it's going to, especially with the price is so much higher, so far above the EMA. So typically, I probably would have taken this position here, so around $45 or so. If I was being more cautious for whatever reason, or I just, wasn't paying attention and I missed it, I would have taken it somewhere up here. So in probably the high 46s, 47. So 45 or 47, I would have gotten in, and then I would have let this ride. And I'll show you where I look for a sell signal is when we start rejecting off of the short-term EMAs. If I want to go sort of aggressively, I will get out then. If I want to be more, or that's not true. If I want to be more conservative, like if I want to say, okay, this is looking a little top heavy, I'm going to get out as soon as it starts rejecting off the 8, then I'll pop out then. If I want to be more aggressive and say, you know what, I'm not going to sell until I get the bearish crossovers happening. And typically what I mean by that is I'm looking for the 8, that white EMA, to cross below the 34. So if I get the white, so it's okay here if it crosses below the 21, right? That's an initial sort of percolation, if you will, in a bearish direction, but it's not fully bearish. But we get the fully bearish formation when we get that 8 crossing below the 34 and then likely to drag the 21 with it. So as long as that 8's not crossing below the 34, I'm not looking to get out. And so I would have gotten in here 45 to 47. We don't have any of those bearish crossovers, even in this dicey period here, right? Things get very, very close. But that white never crosses below the red. You can see it right here is the closest that it gets. So yeah, tight for sure, and probably even trading at a loss for these candles, right? You're probably red through that period, but it hadn't yet thrown bearish crossovers there. And so I would have let it ride, and we would have continued to ride. And I mean, we're not getting any bearish crossovers through this whole period. So again, you're in at 45 or 47, and now we're getting up near 100. And then here we get bearish crossover. So here's probably where I would have sold. And so, let's say I get sort of a mid-range exit and I get out around 79, right? This day it went down 10%. So let's say I get out here around 79. So I would have rode that play from 45 or 47 up to about 79. I didn't actually look at the time periods. This was April of 2024, and the getting in would have happened around January. So this would have been a longer play. Again, I like to be in and out within like 2 months max, but I don't care. Like if the winner is winning, I'll let the winner keep winning. Right? So if I'm in it for 3 months or 3.5 months, which is what this would have been, of course, like just let your winners ride. And then when you get your signal, get the hell out. That's the other thing. To me, I oftentimes think, okay, I only need to be really conservative if I'm worried that I'm going to actually like follow my exit strategy. Or if I'm like going away for some reason, right? Like if I'm not going to be able to watch the stock. And for me, trading on the daily just means I just have to check it once a day, really. And so if I know for some reason I can't do that, then yeah, I might be more conservative. But if I'm following my trading plan and I can trust myself to get out when my sell signal comes in, which is the 8 crossing below the 34, then yeah, I'm good to go. So that would have been that trade. Now, would I have gotten more juice out of the squeeze had I let this ride even further? Yeah, but look what could have happened here. I would have gotten back in, right? If I'm just playing NVIDIA, I would have gotten back in here around 88, and then because my buy signal would have come in, and I would have rode that until about here. So about 120, maybe 115, something like that. So you would have grabbed another good chunk, right? And then it came down, it bounced off of the 183. Again, here's where if you're looking for strong stock, a lot of buyers behind it, in a long-term bullish formation right above the 183, if you want to be really aggressive, or to me this feels really aggressive, you could try to catch any action close to the 183 and say it might dip slightly below, but I'm going to bet that it's going to hold and it's ultimately going to pop back above that 183 with minimal downside. So it's not going to bleed me dry for a long time. I'm going to be able to pop back above it. And here, you see it came within a few cents. It was at 90.05 was the 183 EMA. So it came within 63 cents. And then, it took off again, back up to 131 in a short period of time. So here's some periods where your buy and sell signal, right? These can happen really quickly, right? So if you get in here around like 115 and you pop out here, you're probably selling here at about 117. So sometimes these are very minimal gains, right? And you get it in and get out relatively quickly, but that's when your buy signal comes and that's when your sell signal comes. And if you're following them, then that's your focus. You're not like, oh, I only made $2 a share, or I'm taking a bit of an L on this one. You're just sticking with your signals. You're saying when it says buy, I'm going to buy in. When it says sell, I'm going to sell. And that's what I do. And that's, sometimes you get a bit of a loss. Sometimes in some of the more speculative plays, you wake up and in the pre-market, the stock's down 15%. And that sucks. And so then you have to just, deal with it. But, that's uncommon, and I don't have a ton of those highly speculative plays happening at the same time. But, that's an example for NVIDIA. If you look at, AMD, here's where, if you wanted to play something to the downside, for example, you would have seen AMD struggling here, and then it tried for a second bullish push, and then it popped down. This is really recent motions. This is in October of 2024, got pinned below the 183, right? And when the 183 gives way and we start to get the short-term EMAs crossing above or below the 183, that's when I give it a strong look for a trend reversal, right? So it had been it'd been wavy gravy, but back here it had been in a strong bullish motion, right? Came in, bounced off the 183, bounced again, and then it started to slip, right? And it started to get, the struggle became more and more real with the 183, right? It was dipping lower and sort of having a harder time holding strong action above the 183. And then here, when it gave way for the last time, at least for where we are at the moment, you get these bearish crossovers of the 183 coming down, the 8 coming down below the 183. See that same thing over here, right? And that's where you get these strong motions down. And so if you had caught that to the downside, if you're playing options, doing puts or something, and you caught it here around, in the 150 mark, that puppy is down to 117. And, to me, the look right now, if I were short on AMD, I would still be short on AMD because it's rejecting mostly off of the 8 EMA. It got a little stretch up here to the 34, but I mean, these aren't showing any indication of wanting to cross over at the moment. Could something happen, and could it come in and sort of like rug pull you the other way? Some great news, partnership, earnings, whatever. Yeah, of course. Could you wake up and it's up 12% in the pre-market? Yeah, definitely. But those are the outliers, right? Those are the black swans. And so you're looking at what will work most of the time for most of the stocks. And so this works well for me. If this doesn't work for you and you try it, obviously, find another system. I'm not saying that this will work for everyone, but for whatever reason, for me, this makes a lot of sense to me. I see the buy signals clearly. I see the sell signals clearly. And as long as I follow them, I'm typically doing okay. Tesla. So, strong player off the 183 here, right? You get the bearish crossover here, the 183, and that happened around 232, and that bled that stock all the way down to 138. Came back, reclaimed it, came down and reconfirmed the 183, right? These reconfirmations are also something to watch very closely. Stock flies through the 183, right? It put up very little resistance there, so it flew through it, came down, reconfirmed it. Now, don't fool yourself and think, okay, if my EMA is this line, right, this very thin little line, the stock price has to bounce directly off of it, right? And if it doesn't, then that means it missed it. That's not the case. When a stock comes below an EMA, that doesn't mean that it's resisting that EMA yet, or it's treating that EMA as resistance. You need confirmation. To me, this right now, this here would have just been holding, sort of what I call wrestling with the 183 EMA, right? It's holding proximity to the 183 and ultimately starts re-engaging with it again. If it had re-engaged with it here and then plummeted, started increasing distance away from it, yeah, then you're looking at, okay, it reconfirmed this and rejected. But to me, what it is it's just within range, right? It's within striking distance of the 183. It's holding very close to it, and it's just kind of wrestling with it because it's a sticky point. And it didn't do it here, right? It flew through it pretty quickly here. So now it's kind of making up for that. And it's saying, okay, we didn't give this its due on the way up. So we're going to come down and retest it again and make sure, okay, are we really comfortable going above this level? Yeah, okay. So then we come back up, and now we get a stronger reconfirmation there and a bigger push. And then we come down, and even on this day where it fell almost 9%, right, that gap down, came and kind of convalesced right along the 183 and then shot back up plus almost 22% on this day, right off of it, and then threw all these short-term EMAs into a bullish formation, right? And then you could have easily ridden that, and strong motion there. And now here you're getting very, very close at the moment to some bearish crossovers. And so your question is going to become, do you want to, it's probably depends also sort of like how profitable you are, if you know that there's potential for catalysts right around the corner, whatever it is. So factor in other things as you deem necessary. But if this 8 crosses below the 21, certainly if it then, the 8 crosses below the 34, then whatever you've made the trading plan, I always suggest make your trading plan at the beginning. So if you're going to say, I'm going to get out when the 8 crosses below the 21, then just do that. If you say, I'm going to get out if the 8 crosses below the 34, then yeah, wait for it to do that. And that may mean that you lop off a little bit of the profit that you would have had if you had taken it earlier. But to be fooled into this concept of you have to catch the stock at the bottom and sell it at the exact top, you are just going to frustrate yourself and lose more often than you win. It's just a foolish endeavor. Be happy with getting some of the move or most of the move most of the time. Okay, SoFi. So here's where you're getting crossovers happening, right? And I threw SoFi in here because, we watch it a lot on this channel, but also it's, it's not an NVIDIA, an AMD, or a Tesla. And so, something sort of a bit more speculative, it's not as speculative as something like MBOT at the moment. But, it is to a higher degree, I would say, than like NVIDIA, AMD, that sort of thing. In any case, it had been in a nice bullish formation here, and you see this motion again. This came down. Where did we get the first crossover? Here we got a crossover short term. I actually love this setup. This is my favorite setup when a stock is below the 183 EMA. And this is really just, I say it's my favorite. What I mean by that is for a slightly more speculative play, not super speculative, but a little bit more speculative. Often if I'm looking for something with a lower share price, I'll look for this setup. The stock price is below the 183 EMA, and it's showing potential for the crossover of the short-term EMAs, and then it's within striking distance of the 183. So what I'm looking for is a relatively quick motion where stock price is bearish at the moment, and it's coming up and it's showing potential to cross over, right? And here we get the crossover of the short-term EMAs. And I'm looking at the EMAs, not even so much where the actual candles are. The candles at this point were at the 183, but I'm focused on what these short-term crossovers are looking like. So it starts to cross over here. So I would have looked to get in, and the stock price would have been somewhere in the 7s. And this is why I love this setup, because it comes in and then you have the short-term EMAs crossing over, which is awesome, great lift. What I'm really looking for is for that then to translate through the long-term EMA. So if you can then start throwing bullish crossovers from the 8, the 21, and the 34 through the 183, that's where I feel that you have real potential. And so here we see, getting in at the 7 based off of this crossover, being very aware that it's probably going to be sticky and tight around this 183. And it does, it pushes off. We stay bullish right here. We don't get that white EMA crossing below the red. So it comes back down here and it gets really dippy. Right here, you're probably in the red. If we got it in 7s, we're in the red during this period of time. But if we hold, because our sell signal has not yet been thrown, here we go. Now we're running again. And we didn't get a bearish crossover with the 8 below the 34. Same thing here, right? Fully bullish. And this doesn't start to cross over until this time period that we're in now, so we picked it up around 7, so we're probably at about 100% gain at this point. And now we're starting to look for potential to get out, because the 8 is looking like it wants to hold that bearish crossover of the 8 crossing below the 21, and strongly looking like in the next few days it's likely to cross below the 34. So will that happen? I don't know, but it is leaning strongly in that direction. And at this point, you would have had like 100% gainer, and that's just in shares, right? Keep this in mind. This is just in shares. And so you might want to wonder, okay, do I trim some based on the 21? Do I hold fully and just bite the bullet and wait till that 8 crosses below the 34, knowing that it's probably going to come in the next few days if that's going to happen? That's your decision point at that time. But I love this setup. I don't know if this is too much to get into in this video. Maybe I'll make another video about it. But this setup of these stocks that are sort of lower share price, still have potential, at least, I'm talking about 2 week to 2 month potential. Many stocks can have potential for that period of time. I'm not talking about stocks that, sometimes folks get so fixated on, oh, their business sucks and da 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 da. It's like, I'm not interested in that. I'm looking, can this thing outperform in the next 2 weeks to 2 months? That's it. I don't care if it's viable in 2 years. Does not matter to me. So that's what I love this setup for. So maybe I'll make a different video on that. It's probably worth its own video, but that's where these get really interesting to me. You see, you could have gotten in down here too, right, on this bullish crossover, gotten in around, high sixes, and then you would have been popped out again, probably with maybe flat, maybe a teensy bit profitable or a teensy bit loss. But then you could have gotten back in here. So, right, you can get in and get back out. Just because something yields a very small or even no profit in one trading example doesn't mean that you need to throw the whole thing out and say, oh, this doesn't work for me. Give it a shot, maybe hone your skills and see if it works for you. If it truly doesn't, or you have something that works better, then yeah, of course you use the thing that works better. But also don't be afraid to adjust the time frames. If for some reason 8/21/34 don't work for you, or 183 doesn't work for you, just change it. You can use the sort of more standard like 10, 20, 50, 200, right? I know folks who use that. Also, you don't have to have 4 EMAs. I oftentimes think I could get rid of the 21. I'm so accustomed to looking at it. I probably won't, because I do utilize it sometimes as sort of a leading indicator. But, if it felt cluttered to me or confusing, I would probably pop the 21 out of there. And I would just go with 8/34 and 183. And most of the time, it would probably be right. I would probably get in a little bit later and exit a little bit later. So maybe I get trimmed a little bit on both ends. Maybe I get in when the stock price is a little higher and I sell when it's a little bit lower. But for the most part, the gist would sort of be intact. All right, folks. Well, if you have comments or questions or whatever, feel free to put those below. Hopefully this was useful in some way, shape, or form. And as always, I appreciate you watching, and I will see you in the next video.